Okay, let's get started. I'm going to break down GBP, a complete breakdown of this pair. Look at the trading opportunities. The next major move that I'm expecting, that's the first thing. And whilst that move is confirmed, how would I approach the market, where I would be expecting the market's opportunities are. So use this breakdown and understand how I'm doing a pure top bottom analysis. I'm reading the price action, market structure, variations, and determine the trading plan. Remember, it's a trading plan that matters. I'll say it again, I've said in the previous videos, it's a trading plan that matters. You can use any strategy for the purposes of entering the market or exiting the market or managing the trades within your trading plan. It can be a strategy on M5, M15, H1, M30, anything. Let's get started. This is a monthly chart on GBP yen. Now, from the monthly perspective, yes, we are in a bearish trend. You can see the price recently has been retracing, and still the moving averages are acting as resistance. You've got 50 EMA acting as resistance. You've got 21 EMA acting as resistance. Now, what the moving average is suggesting is there is a momentum to the downside, but that's what they're suggesting. Last month, you had an inside bar, which is an indication that, yes, sellers begin to enter the market, not completely have taken over, but yes, they have started entering the market, and also the price rejected from the resistance levels. So let me start the breakdown on this pair. So you can see the moving averages acting as resistance, inside bar. Sellers have entered the market, which means that there are sellers in the market. And what I'm expecting is this, and I'll show you the complete breakdown in a second. If the price fails to break previous month candlestick at 148.34, 50 levels, 148.50, let's round the number. If the price fails to break that level, then I'm expecting the price to roll over to the downside. That's what I'm expecting. So if the price fails to break this level, I'm expecting the price to roll over to at least 140 levels. Now, Brexit is one of the fundamental reasons why GBP has been struggling. United Kingdom has sought an extension of 30th of June, but these extensions means nothing when there is internally no agreement and uniformity amongst the parties in United Kingdom. So the front is pretty divided. In a near future, we're not expecting any agreement amongst the parties on a single front before they can put forward to the European Union. So fundamentally, your sentiment is pretty bearish, and that is a pre-Brexit sentiment. Imagine the impacts of Brexit once it will start. Once the UK officially leaves the European Union, it will be huge. Already, United Kingdom, since up to last Thursday, by the London standards, UK has already lost more than 1 trillion pound worth of business to European Union. What it means is that the businesses have moved from United Kingdom to European countries, which can show you the impact of this Brexit on the UK economy. Now, not just this, you've got a global recession on standing on your heads. Clearly, which economists believe which will kick in into next 6 to 12 months. Some economists believe 16 to 18 months. Again, there is a disagreement amongst how long it takes, but there is one agreement amongst them. It's there, it's on its way. It's pretty obvious from S&P 500 and the dollar index itself from the technical standpoint. Now, in the near term, not in the long term, in the near term, I am not expecting at all any bullish sentiment. Again, I said sentiment, overall temperature of the body, sentiment on GBP pairs. Now let's get started and break down this further. This is the weekly chart. I'm just going to mark some important levels. I'm not going into details. If you want to learn how to mark levels, there is a video on the YouTube that you can watch. Price has been rejecting from 179. It is a monthly resistance level. Has been rejecting, as you can see previously. Price rejected once, twice, 3, 4, 5. Now price has been rejecting. The most important point is price recent rejections. Price is forming low high formations. As you can see, this high is lower than the previous. So the price has been printing low high formations, you can see. So because of this low high printing, which is a market structure analysis, what I'm expecting is if the price is printing low high formations, price likely to form a lower low formation. That's what my expectation is. Now, yes, that's what overall expectation is, and I'm pretty certain on this, but the first target of the price will be, we'll take it from one monthly level to another. So my target would be around that the price can complete this journey from 149 levels to 138 levels. Now, look at the price action here. You got price came back to these levels, strong engulfing candlestick. Again, there was indication of sellers entering the market end of the week. Next week, sellers came in, pushed the price down, huge engulfing candlestick. Price retraces higher, another sellers, and you can see there is a battle going on amongst buyers and sellers. And now it seems like since last week, sellers have taken the battle on and seek control on this. Shooting star formation. This week, the price tried to push back higher. Again, you can see this rejection, significant rejection from 1.27, 20 levels, and the price came back. So from the outlook of the price action, it looks like that sellers are taking control of the situation, and at some stage, when they overrides the buyer, we will see the move which I'm expecting to the downside. So I've done the market structure analysis, I've conducted price action analysis. Keep them separate and try to strike a balance between them. Now, when do we really believe the price will start going to the downside, and how would I devise my trading plan? And let's focus on this now. Again, significance of these levels. Yes, that's A, that's your B, that's your C. So if I apply Fibonacci principles on them, then you can clearly see that the price is rejecting from 88.6 and 78.6. There is a Nike harmonic formation as well, which is certainly price. The first target of the price could be at 141.75. Again, I am purely focusing on the rules of the price action, not advanced technical and analytic tools. And the reality is you just need a pure price action and understanding how to break down the price action. And that's what you need to be a successful trader. All these tools can be an add-on factor, tapping at your back, saying what your analysis is. There's another reason to believe on it. But my advice to the new traders are purely focus on the price action. Now, if the price, that's what my trading plan is. Once the move began, then I'm expecting the first target at 138.67. That's what my first target is. If the price breaks this, the next target is 134.86, and ultimate target is, which pretty much aligns with my with my weekly levels at 130, between 130, 1 to 130, 130.50 levels. That's what my expectation is. That's an overall target, of course, in the long run. Now, how should you approach this? We've been selling this since last week. Again, the move have not begun. The first thing is, when would this setup invalidates? Now, if the price breaks this top high levels, if the price breaks this, which is at 149, which is now at distance of nearly 350 pips, if the price breaks this, then this setup invalidates. This is gone. If the price breaks this, then that's gone. And also, if I see accumulation of buyers here within this, strong strength buyers, bullish candlesticks, I can see, because this is a battle zone between buyers and sellers. Now, seeing this battle where we are at the moment, it seems like sellers have taken control, and at any stage, we will see that the price will break this level. The price has to break 144.30 levels to confirm the first confirmation of this move to the downside. Now, if the price breaks this 149 levels, then yes, the setup is gone. You are not expecting anymore. The price will go down. First indication. Secondly, if you see bullish candlesticks formations within this battle zone, now you see bullish candlesticks. Let's say you start seeing these candlesticks. Then I would change my analysis and I'd say its likelihood is that the price can break the resistance at 149 and go higher. So candlesticks on weekly, candlesticks on daily would tell you what is coming next. It's a very good tool which could tell you what is likely to be the future. So if you can strike a balance between your candlestick analysis, your price action analysis, your market structural and variational analysis overall, then you would pretty much, I'd say more than 85% ascertain where the market is heading next. Now, this is my trading plan is. I am expecting, my trading plan is the price is likely to go down. So every time when the price goes higher, now focus on this. This is how I have been trading this since last 3 weeks. And I've been trading this extremely successfully. Last week, there was a successful move of 111 pips. Now, regardless, the trading setup hasn't opened up yet, but I have been successfully trading because if you have the control over the analysis, you know exactly the setup in formation and the setup in action. So focus on. Because my trading plan is to the downside, that's what my expectation is. Every time when the price rises to these levels, focus on this. This is the most important part in this lecture. And I see rejection there. I am selling it. I've been selling it. So you could see I've made 365 pips. I've taken advantage of this last week, 200 pips. This week, when the price goes higher, there was another 250. So you had these, since if you've been trading with this trading plan, you've been in profitable, hugely profitable from last 3-4 weeks. Now, this is my anticipational moves because my anticipational move, because my main move is to the downside. That's what I believe. Therefore, I'm anticipating that the price will go down. So every time prices enter a significant area of resistance or a supply zone, I am taking advantage of this in the direction of my trading plan. So it's an anticipational direction or anticipational moves. That's what I'm focusing on. Now, when the move will be confirmed, now that's another factor. When the price breaks this, it activates the trading plan. Now, after the price breaks this, it activates the trading plan, and any low high formation after this is your trading opportunity. Again, I say this, when the price breaks this, it activates the trading plan, and any low high formation is your trading opportunity. Again, I say this, when the price breaks this, again, there are rules to it. You need to see it where what time frame you'll be expecting those low high formations, low high forms on the daily time frame, H4, M30, H1. Again, I'm not going into details on this online lectures, but in principle, once the price breaks this, it activates the trading plan. And after that, any low high formation, if it is given, we will be taking advantage of this. That's where the trading plan activates. Now, if the trading plan never activates, and the price keeps on ranging, which she has been since last 4 weeks, then when I see sellers are presence of sellers, when I see this, right, I am taking advantage of anticipational trades in the direction of my trading plan, which is to the downside. And I've been doing this successfully last few weeks. Now that is the trades in direction of my trading plan. Hope everybody understands. Now, you do have a counter trend trade. This level, now the sellers really are taking control of this. So you might be a little concerned taking a counter trend trades, because counter trend trades will always be riskier. But I like to mention this, it's part of the trading plan, your confirmed trades, your anticipational trades, and your reversal trades. Now, as far as reversal trades are concerned, for me, because it's against my trading plan, that's why it's reversal, and against my anticipational trading plans, against reversal. If I see buyers enter the market here, and I like to take a counter trend trade, guys, I would take those trades. So had you used this, you would have taken advantage of this move. Even last week, you had an anticipational trade that spiked higher for more than 100 pips. But my suggestion and recommendation is, and purely education recommendation, that try to trade in the direction of your trading plan. So if you're waiting for your trading plan to be active, trades in the direction of your trading plan, anticipational trades. The reason is, because let's say the trade opens up, then you're more likely to already be on the ride towards the trading direction of the trading plan. So you've got two shooting star formation from last week, engulfing candlesticks. Sellers are hugely in control. You can see the moving average begin to show a slight indication of a reversal here. So I'm expecting the price to roll over. Well, I'm expecting the price to form a low high anywhere between these two levels and then goes down. So let me break down this trading plan. Now, this is where I formalize the trading plan. Focus on this. Now, I'm trying to establish the significant areas where I'll be focusing on for the purposes of trading even next week. There we are. You can see price begin to make a low high formation. This is a low high formation. That's a previous high. So you can see a loss of momentum. Again, significant areas I'm marking. Now that's one of the significant areas. As I said, my trading plan is to sell. So if the price breaks this, any low high formation which I get, that's my trading opportunity to the downside. So my trades are there. That's where my trades are. That is where the trading plan activates. Now again, what if the price stays in range? This is an area of interest for me. Anytime price goes in this area and I see rejection, I will seek a selling trades there. That is my target, which is nearly more than 200 pips, 250 pips. Now, you had a nice trading opportunity there because you would have marked this zone. So you had a nice trading opportunity presented there. Now, in this instance, price was pretty close to the area. There was rejections. And again, a good trading opportunity. But again, let's break it down further. Any other significant areas here? As you can see, the price came back, forms a low high formation, came back, test the support level, rised again. This is also an important area. Therefore, this is what I traded last week. And I'll show you the glimpse of it. This is my secondary important area, guys. If the price rejects from here, then yes, my first target is this. And of course, if the price breaks this, it opens up the doors to my trading plan. Now, moving averages, you can see began acting as resistance now, which is obvious. Price is forming low-high formations. What I'm expecting is that next week, price will rise anywhere between this area. Even the price goes to these levels at 148.50, it's still your selling zone, selling opportunity. But if the price rises anywhere between these areas, it can go there, and forms a low-high formation. You can take advantage of this to the downside. And that's your first target, yes. But yes, my overall target is this. Now, that's what my expectation is. So I will not be too much interested in a buy trade. Rather, I'll be waiting for the price to retrace higher. It can likely to retrace around these areas at 146.50 levels to 147.20 levels. It can retrace further to 148.50 levels, anywhere between this area. So this is you will be sitting as a sniper looking for selling opportunity within this zone. That's what my expectation is. Now, what is the next target to the downside? That's what my expectation is. Now, let me explain. Let me mark that up. This is the next target. This is the next target. This is the first one. Again, 150 pips distance. If the price rises to these levels, your reward significantly increases against the risk. As you can see, price has been forming low-high formations. So anywhere low-high formations, it can go up to these levels, no doubt. Again, but I will pretty much be expecting the price to form a low-high formation. It shows a loss in esteem from the buyers. That's what my expectation is. Now, any low-high formations will be your selling opportunity to a low formations. Again, any selling low-high formations presented will be your selling opportunity to the downside. That's what my trading plan is. And as I said and explained, if the price breaks these high levels, then your trading plan invalidates. Also, another factor, if the price start accumulation within this weekly zone with strong bullish candlesticks, then you have to wait for the sellers to enter. You can't just stick to the prior trading plan. You can't just stick to the trading plan. If you see buyers accumulation, that you would be expecting, what if the price likely to break this resistance level at 149 and go further to the upside? But it looks and seems to me a very good trading setup. If you've been trading this trading setup, as I've discussed the trading plan, how to trade the range, and then when it opens up, so every time price goes higher and rejects, you have bearish trading opportunities. And if the price breaks this, gives you the first low high, will be your first trading opportunity. So that's the trading plan on GBP yen. It remains the same as it was since last week. I would prefer selling it if the price forms rejections on these significant levels. And I'll tell you this, price does reject on these levels more than 85%. So take advantage of this, use this breakdown analysis to understand how to conduct a complete review of trading, a price action, and devise a trading plan. A very good trading learning opportunities these lectures are. So take advantage of them. If I see more trading opportunities, I'll share the analysis. Thank you.